Today, fundraising is actually very challenging for Bitcoin companies, mostly because there's not many Bitcoin savvy investors. There's literally probably a dozen, with me being one of them. And so out there, it's very difficult to have that conversation with an investor if they don't understand. So there's thousands of investors in Silicon Valley, but a very small portion would actually make a Bitcoin investment.
Meeting investors is an interesting little game sometimes. You don't want to let an investor know that you need money, so you'll never seem desperate. It's kind of like when you're going after a girl. Our pitch to investors is really that we're a high-growth company in a high-growth space, and the risk-reward ratio is very high. Venture investing is all about big exits. If you can convince an investor that if they don't invest in you, they're about to miss the next big thing, you're in a very good position. When you look for an investor, you have to understand that this is somebody who's going to be part owner of your company, and they're effectively becoming a quasi-co-founder. So when you're looking at an investor, you really have to make sure that this is somebody you want to work with. There are some firms that may not treat founders very friendly. There are some firms that might try to take too much control or change things that might not be in line with the vision of the founders. And so typically in Silicon Valley, a startup company will look for a firm that is really aligned with the founder's vision of the company.
In terms of valuations for Bitcoin startups, we don't have a precedent that we can look back on. And so we're seeing sort of two different approaches. Early companies are getting a valuation of roughly 1 million to 3 million. That's really pretty small. Companies at scale, Coinbase, these other type of companies, their valuations are 150 million, roughly. And so the ones that are doing well, like they're getting those good valuations, 100 plus valuation is actually fairly large and uncommon. But those early companies, they're going to have to take low valuations just because there's not enough history that investors are going to be willing to pay for it. And so what I would recommend is take as little money as you need so you don't dilute yourself too much. Build the product out, get yourself 12 to 18 months of runway so you can prove out the product and let the market mature, and then try and go back out and get a valuation of 5 or 10 million or 20 million, for an early stage company. It's getting better every day, and I'm seeing more investors come into Bitcoin, but the amount of money going to these companies is very small compared to the total going into all startups. Investors, their job is to make money. It is to deploy capital and generate a return. And so we need a few companies to actually be sold. Once investors see liquidity in the marketplace, they will rush in. I think a good example is when Instagram was bought for $1 billion, all of a sudden a lot more photo apps got funded, because they feel like, okay, there's a market there, there's future potential. And so that's the big issue. They have not seen liquidity, so they don't know what their return is going to be, if there is even one that can be gained. And so we just need that one company to sell for $50, $100 million. That will really crack the door open, get a lot more investors interested.